Hello and welcome to the CFO Weekly Newsletter. Thank you all very much for joining me. Well, let's have a bit of a look at what the markets are doing right now. We can see that was the prior opening range. I'll just get rid of that. Okay, so let's see what the markets are doing. Federal Reserve Chairman Powell came out last night and said that they would do whatever they have to do to continue to support the market. So what does that mean? More stimulus, making sure they're not raising rates. They won't be doing that anytime soon. And the market took that as a very good thing. S&P up 1.14%. We were in opening range bearish territory. But what we got here was something called an expansion day, where the actual market, or anything really, could be a stock, but in this case the actual market S&P 500 went below a significant moving average, in this case the 21-day moving average, and then closed back up above it. That's called an expansion day and is normally bullish. The very next day we then close right in between the opening range here. So we're in neutral territory here between bullish and bearish. If we do get that move tonight above 3930.41, then we are officially in bullish territory and we will continue to move higher from there. So that's where we are right now. It does look as if the market wants to move up again. And we need to trade what we see and not what we think. Bit of an overall perspective, but if we have a look here at what happened last night, we saw the economically sensitive Russell moving up quite strongly on that news from the Federal Reserve, up 2.36%. Anything above 1% is significant. Dow Jones Transports and the S&P and the Dow Jones Industrials were all above 1%, which is that significant line in the sand for an index. So, pretty significant moves higher. Nasdaq still lagging, still below its 21 EMA. All the other major indexes are above their 21 EMA. So a little bit of weakness in technology, but did have a rebound somewhat last night. If we have a look at what a lot of people are talking about, which is gold is still in a downtrend. Right, no doubt about that. Not looking to do anything with gold right now. Maybe looking to get into some gold mining stocks soon, but not right yet. So that's what's happening there with gold. Silver, one way of tracking that is with SLV. That's looking much better, as you can see. So that was up last night, 0.89%. Some nice volume here, but still above its 21, looking pretty good. Certainly looking a lot better than gold is right now. So we have a look at Bitcoin. Okay, we have ways in the CFO program where we can actually trade Bitcoin ETFs and Bitcoin stocks, or companies that have recently bought a lot of Bitcoin, and we can do that through a cash flow strategy, and we can do that through simply buying of options as well. So Bitcoin had a move down, okay, and bounced off the 21. So could this bounce now be another leg higher in Bitcoin? Possibly. Need another day's confirmation before I could say that though. But it certainly has had that move down, should I say, some sort of a retracement back to the 21. That's pretty normal after a big move up. We could see a bounce from here, but we need another day to confirm that. So that's what's going on there with Bitcoin. Now, as far as some of the positions that we are in, RRD was one of them. Have a look at that move last night. Huge volume there, great earnings, up 32%. So we've done very, very well with that particular trade that we have on with call options. Another one that we have on right now is we see that moved up very nicely last night. We've got this with a call option that was up 4.25%. Reason we initially got into it was this very nice squeeze where the Bollinger Bands are inside the Keltner channels. It's now broken out here. Both the upper and lower Bollinger Band have broken out. So we've had 1, 2, 3, 4, 5, 6, 7, 8. A squeeze here will typically last 8 to 10 candlesticks of whatever time frame you take it on. And we may have another couple of days of upside yet, but that one's looking very, very nice. We did a cash flow strategy on it using spreads, and we bought a call option. So we've made 2 lots of income on this. It is working an absolute treat. We will close our spreads tonight and we will remain in that long dated call option that we have. You've got to be able to pay for your long term trades through short-term cash flow strategies. Another one that we did recently, just to give everyone here in the newsletter some real value here, is AG. Now, AG, I hope my members don't get upset with me showing you this. This is our #1 silver trade right now. Okay, now I explained to my members last week why I chose AG and a whole range of other reasons why I come up with this trade. But the point being, what we did is we took a long dated call option, okay, that had 703 days until it expired. Okay, we took it out to the 21st of the 1st, 2023. What we then did is we set up a cash flow strategy through the use of a put credit spread to bring in income right now to help pay for this long dated call option. So I do believe that silver will move up and continue to move up, but it may be a longer term trade, right? And I want to stay in it for the long term anyway, but I want to make money in the short term though. So what we did is we we bought the 17 call for $703 a contract. That's now worth $900. So we've made a nice profit on that in a week. But then what we did is we sold the 15 put and bought the 15 put for a $245 credit, selling 10 contracts. This was within 31 days until expiry. What we're going to do now though is, after being in it just 7 days, right, we're going to close this out now for $8. So you receive $245 as a credit. That's yours day one. And then now we're going to spend $80 to close out this spread. So what does that mean then in English, Sean? Well, 245 we received, and we're going to pay 80 to buy it back. It means we're going to make $165 per contract on this spread. Because why? AG, if we look at it, AG has made a nice move. We had a big move here, bit of a consolidation day, and then another big move. So we're up over $20 now. We were looking at it down here last week when it was around, here it is here. We're looking at it right here when it was around 1742. So it's had a beautiful move to the upside. We've made good money with the call, but now we've actually made $165 of profit when you take 245 minus the 80 we're going to spend to buy it back. Pretty good, right? So now that option that we bought, the long dated call option, isn't costing me 703 because I just made a profit on the put spread in a week. So we minus 703 a contract from 165, the profit we made on the put spread. So this is now worth 538 is a way of looking at it, because 165 of it was paid from the put credit spread. So we've got a cost here of $538 and a value of $900. So looking very, very good with this. Now, Sean, will you sell more credit spreads as we go forward on AG and pay this call option down even further? You better believe I will. Not right now, but I certainly will do that. The goal is that throughout, the life of this option, which is 703 days away, I can have this paid off relatively quickly. If I can have this paid off in 90 days or less, even if it took me 150 days, if I can pay this off in 150 days, what I now have is a riskless trade, none of my own money at risk, with this AG call option. That's the way to trade, right? So you're making money even when the stock doesn't move. All it had to do is actually remain above, let me just show you this, remain above 15. So what I did is I took a pretty significant level where the stock I would not believe it's going to go below. So it come down and bounced off the 21 and the 15 level, okay, filled that gap and then started to move higher. So what I've set up here, I believe that it was going to remain above $15. But because it's had such a nice move in the last week, I can now close out that put credit spread and realize most of the income. But I'm still in the 17 strike call all the way out to 20th of January 2023. So you use a combination of long term and then you use the short term cash flow strategies to help pay for that. So even if this stock, it did have a nice move, which was great, but even if it didn't, I still would have made money on this put credit spread. And that's the beautiful thing about it. And then ultimately we can pay that off so that we have none of our own money at risk and we can still stay in the trade. So that's the goal with that one. So that one worked out really well. I did a very similar thing with Well. We've made great money on the put credit spread. Right? Could be set up as a call debit spread as well. But that's worked out really well. So we're going to make some very, very good money here, right? RRD, Well, and AG. We have a couple more positions that we want to put on this week. Another one in oil, because, I do like the look of oil going forward. I think oil's looking good now, starting to rebound. Things are starting to open up again. It was really incredibly low. I mean, you've got to remember with oil back in what was it? It was April of 2020, right? Where it went on the futures, it went negative. It actually went negative $37 a barrel. So it was very, very suppressed. Obviously, coronavirus, lockdowns, lack of travel, lack of demand, no doubt about that. There was a price war between Saudi Arabia and Russia in early March, which really caused a lot of pressure on oil as well. But I think from here, we're going to see a move higher in oil. If we do get above 50, that's going to be significant. We could then certainly have a much bigger move. But I think this is going to have a nice move. So I've got a position that I want to set up in oil, and I also have a position that I want to set up in Bitcoin. Not owning Bitcoin, not even owning one of its mining stocks, cash flowing one of its mining stocks that I believe it will stay above a certain price. And this is how we do it. You need a combination of directional trading, where you're looking for it to move up or down in a particular direction. As well as that, you need a cash flow strategy, which is non-directional, that will make you money provided it stays above or potentially below a certain level. I think that's really important to be able to do that. We made a 32% return on our ETF with agricultural commodities, right? This one has been an absolute beauty. 32% in just a couple of weeks on that one. So we are doing very, very well right now with our positions. But there's some of the things that I'm looking to get into for this week. A little side note here was one of our members just sent this in, a put option trade that Francis did on Roku. He bought the 450 strike put option. You can see it's time stamped there on the 22nd of the 2nd. He bought this for $1,472. The next day, he closed it out for $6,742. There it is right there. Have a look at that. So on that particular trade, there's his actual brokerage account. Okay, he made $5,271 in a day. There it is right there. Realized profit. Happy days. How good is that? So well done to Francis for doing that. Where is the trade? There it is there. So entering here and closing here. Now, another one of our members got into GME. Now, have a look at GME. Got into GME utilizing our high short interest strategy. This one's very interesting because it went up $46 yesterday. And if you have a look at this one in pre-market, let's see if I can get some pre-market data here. Where am I? Pre-market data. Why have I forgotten how to do it all of a sudden? Here we go. We'll get there eventually. All right, so let's have a look at this. Okay, so this particular stock in pre-market is sitting at $139.50. So it's having a significant move again. So it's gone from 91 to 139.50. Very volatile. But this member actually purchased the 41 strike call for around $7. So, even if it opens up around 130, it's got to be worth, at least $90, right? Around $90 or more. So he's going to make an absolute fortune on that. But, there's some of the things you can do with options. Some pretty powerful stuff. So, members making incredible amounts of money. There's some of the things that I'm looking at right now. I still want to see the market break above 3930 to really confirm the bullish mode in the market. Federal Reserve is behind the market 100%. They confirmed that yesterday. And don't forget, the Federal Reserve can do many things to keep this market moving higher than anyone can realize. They've talked about unlimited stimulus. They purchased the high bond ETF, and they put $412 billion into that. You have the plunge protection team, which was set up by President Reagan in 1987, where the working group can come in and actually buy the market to keep it from crashing. This is something that can be done. Federal Reserve lending institutions money to buy equities. There's so many different things that can be done here to keep things moving. I mean, just look at Japan. I mean, Japan, the Bank of Japan, the central bank there, owns around $460 billion worth of equities. So there's a lot of different tools that the central banks can use to keep this market going, but I always use price action. Whatever it is telling me, I go with it. Right now it's telling me neutral. An expansion day here though, showing that is a bullish sign. Neutral here. If we close above 3930, I'm looking for us to continue to move higher, regardless of what the headlines say, regardless of what all the naysayers talk about as well. So for me, right now, we're in neutral mode. We are setting up some conservative cash flow strategies right now to make money even when the market doesn't move in a big way or doesn't move at all. We will still make money. Our silver trade, we're going to continue to cash flow that. Our well trade is working out exceptionally well. Agricultural ETF crushing it there, and we'll set up a new position in oil. So my friends, I hope you found that interesting. I did a great presentation today with Harry Dent and Jim Ricketts. If you wanted to have a look at that presentation that I did, just send an email to support@cashflowoptions.com.au, and we'll be happy to send you a copy of that presentation that I did. It was fantastic. There was thousands of people there. It was great. And then I did an interview just a little while ago with Mark Faber. Interesting character to say the least, but it was very informative, and there was some great stuff there. So let's keep an eye on the markets. Right now we are making great money like we always do, and we look forward to continuing to work with you, educate you moving forward, and I appreciate you listening to this video. We'll talk to you all again next week. All the best, and bye for now.